Good morning, and traders, and welcome back to the Short Vol Show. My name is David Lincoln, and we have a Monday morning. The market is up a little. The VIX is down a little. UVXY is down a little. It's actually down 1.5 points. It's actually not morning now. It's afternoon, and the country is no more united than it was last time I talked to you. It's not as if current political events have created any sort of consensus. In fact, everybody's at each other's throats. I tried to have a discussion with somebody about politics, and it didn't get too heated as we have a mutual respect for each other from different points of view. And I guess that's all that we can hope for at this point, is that people can agree to disagree at the best point. And UVXY is down today, although not really that near the all-time lows. Let's pull up a chart. And welcome back, all my friends and traders. Hope you're going to make some money this week. I salute you. And here is a chart of UVXY if I get out of the way. And if we look at our good old friend ACB, not looking too healthy. $4.45. CGC, Canopy Growth, down 91 cents, trading 22.93, and the MJ sector continues to just sort of sag. It sags away, and it's pretty much nobody's making money in this sector unless they're maybe shorting it. There's a beautiful chart of CGC just kind of fading away into obscurity. Tilray not looking much better. Remember Tilray, the high flyer? That $200 stock. It's now $24. You could have just stayed short the whole way. However, go to Beyond Meat, which was highly compared with Tilray. And Beyond Meat, though, is in your local supermarket, and they are producing a product. I almost tried it. Today. I almost bought some Beyond Meat burgers, and I am a huge carnivore. In fact, I like to eat meat more than anything else. An all-meat diet would be bliss for me. But I almost tried it, and I am going to try it at some point. How bad can it be? So I'm going to give it a shot. The Beyond Meat burger. Meanwhile, I had a question from a viewer I wanted to address. Person is short some long-term calls in NEO. I don't know if she actually is short or this is a hypothetical question, but she was asking me, okay, well, what if NEO gets delisted and I'm short these leap calls? What's going to happen? Will they just stop trading and it's over? Or really, what's going to happen? And I have to do some more research. I told her I'll do some more research. I haven't done that research yet, but just to give you a guess answer and some common sense advice, if you do have an options position in a stock that's threatening to be delisted, I would suggest that you get out of that options position. I think potentially it could get frozen in place until they expire. I do have to do some more research because maybe I know that it's not like a cash takeover where everything goes to parity. That wouldn't make sense. But I would just get out of it if you're in this situation. But let's see if we can research it right now. I probably should know the answer to this question, having been a market maker for a while. But the question is, if you have an options position, let's say in leaps in a stock and it is delisted, what happens to your options position? How do you get out of it? So let's type it into Google and see what Google has to say. And I apologize for not having researched this. So if a stock is delisted from trading, then it's worthless and puts are worth parity. So calls, if they're out of the money calls, maybe they do go to zero. If I own put options for a stock which plummets and delisted, what happens? If I'm short a stock and a company delist, will I make 100% profit? I know the answer to that one, I believe, because if it's still trading in the OTC market, then your position will get converted to the stock in the OTC market, I believe. As far as being short calls, yeah, it's going to continue to trade in the pink sheets. So if it gets delisted, it's going to continue to trade in the OTC market, and the calls will still be based on that OTC stock, because it's not like the stock halted indefinitely. The stock is still trading. It's just trading in a different spot than the major exchange. So in that case, I believe the options will still remain open, but they'll be based on the OTC stock, and your brokerage may not cover them anymore, which would be a problem. So I would recommend that you get out of options on a stock that's being delisted. I probably shouldn't have worn a white shirt today with the white background. I guess it's better than that moire that was going on the other day. Arsenal. Woo. And I'm only an Arsenal fan if my only choice was the British Premier League. In normal life, I've been a Juventus fan most of my life, although I don't follow them very closely right now. All right, so there you have it. Let's take a quick look at the term structure, and we'll go from there. So VIX term structure, you'll notice that that thing we had a couple weeks ago, which was that the spot was very far away from the front month future price. Well, that has contracted a lot, and so we're 88 cents between spot and the front month future, which is much kind of more reasonable than over $2. So this relationship between spot and the front month future, otherwise known as the roll yield, will bounce around, and right now it's a little tighter. If the VIX continues to fall, this will widen out a bit, I would say. When spot is around a price that I believe the futures people think is going to stay that price, you know, if the futures people feel that like spot is at a price where the futures will be, where spot will be a month from now, then it's more likely that the spot and the futures price converge like they have. So now with spot up around 16, the futures are closer to it. If spot gets back down to like 13, 12, they'll probably hold the futures up a little bit higher. So in this particular situation, it seems like the futures are going to stay more around the average expected volatility, whereas spot can bounce around a little bit based on the formula. We do see contango of almost 7% right now. And how is our position? Oh, thanks for asking. Well, the position is okay. We haven't got great marks lately. Remember, we're short 20 of the November 26/30 call spread. So short 20 of these spreads. So it ultimately could be worth up to $8,000 if UVXY is 26 or below on expiration of November in 46 days. And it's kind of nice for us that we are below that 26 number right now. So it's kind of like we want to get as far below that number as we can to give us a little bit of a cushion in this position. I've been messing around a little bit with selling $4 put spreads to the downside of this. Right now I'm short basically one of them if you look at the position here. And so if UVXY is to go down and take out the all-time low again, if it trades like below 23, then I might sell some puts. But with UVXY up here, I'm comfortable just being short this call spread. I would suggest, and UVXY has been very hard to trade, so I would suggest if you want to trade the short vol thing with options, VXX might be a better option right now. That's a pun. Option. And something I was looking at, something like the December 23-26 put spread, or the December 23-25 put spread, gives you 81 days. We're $50, 50 cents away from that put spread being at its maximum value. I think to expect VXX to decay by 50 cents in 81 days is very reasonable. Volatility really is kind of at a mid-range right now. When it was 13 and change, that was kind of at the lower end, but 16 and change is really sort of a middle ground. I would call a middle ground these days between like 16 and 20. So this is a good spot if you're going to calculate like a few months out how much this is going to decay. VIX between 16 and 20 is a good spot to use that calculation to put a position on, because the likelihood is if it pops much higher than here, it will kind of come back before the end of that time, and you have that bonus that it could move lower from here. Once again, I was very wrong on my prediction for the VIX on the Volatility View show last week, and so I feel a little silly about that, but that's okay. And so that's where we stand. I hope that you have a good week trading. My plan, I had to take some of the airport today, but my plan is to be on Twitch on Monday, Wednesday, and Fridays at 9 a.m. So you can meet me there, and I will be there, so you can know when to see me there, and you can come on and ask questions, and that will be fun, because this show is for you guys. This sample position is just a sample position, and that's not the focus of things. It's something to talk about. It's something to use and make an example of. Let's quickly just take a look at bar chart and see if we've got some high volatility stocks today to talk about. So I'm going to barchart.com, and then I'm going to go to options. Well, we landed on unusual option activity, so let's take a look at this. SFIT. Now, we did trade SFIT earlier in the year. What do we have in that one? Let's see. The 14 put, 9,000 trade. Trades 22. That's kind of like right in the middle. So maybe the trade was shopped around. But let's take a look at SFIT for a second. Oh, I'm sorry, SFIX. Which is, here we go. And volatility pretty high in the front month here. If we take a look at the chart, there's a put buyer, so this thing could potentially really go lower. I think when you have a bunch of puts trading that are out of the money like that, that seems, it's very hard to interpret options flow, but a put buyer that's way out of the money like that, it really does seem bearish. At least somebody's making a bearish bet in this. Now, they could be buying a zillion shares of stock, and they're just buying the puts to protect themselves for some sort of binary issue. And I would recommend, if you're going to make a play based on just unusual activity, that you really research your stock and get to know it. We could briefly here just go to the news stories for SFIX, and the way I'm doing that is I'm going to the bottom of the left side of my screen in Thinkorswim, and I'm pulling up live news. And option straddle prices for stock So we've seen that the straddle came up on their little scanner for this at as being high. So it's saying a 22% move expected after the bell on October 1st. So if you're going to put a position on for earnings, you have until tomorrow afternoon for this one. And we see the straddle is priced for a 22% move. So they're looking for something to happen. And somebody, it looks like, made a bearish bet on this. Okay. Average rating of analysts of a hold, which is kind of interesting. It used to be that everyone just recommended things. It's like every single recommendation was a buy, but things have obviously changed since then. So, big put buyer in this one. Let's keep watching this, and let's look for a second at, just for curiosity, at our old friend, the calendar spread in this one. So we see the front week volatility 225, second week 148. We look at 46 days, it's 93. So let's just take a look and see what the calendar is at the money calendar is trading. So if we go to buy, let's call it the 19 strike, because at the money, oh, we've got a half strike too. So 19 and a half. If I buy the 19 and a half call 2 weeks out, and I sell the 19 and a half call 1 week out, it shows 10-cent credit. Oh, no, that's a 19. Let's do 19 and a half. We will buy time spreads for 10-cent credit any day. You'll buy a zillion of them. If you can buy it, if you can leg into a time spread for a credit, that's free money. So let's see. The only risk with that is getting pinned on expiration, really. So 15 cents for the vertical. If we wanted to use that information that someone's making a big bearish bet on this one, if we wanted to use that information and just kind of go with it and get short onto this one, we could either A, buy some of the same puts that these people bought, or B, buy some sort of put spread. So here's the puts right here. You can see them, the 14 strike, 9,700 trade, 22 cents. Could go ahead and just buy some of these 19 puts, right? Now, obviously, this stuff is jacked to the moon, but what if you were to buy like the 18-16 put spread? 18 put. So it can be worth $2. You pay 17 cents for the put spread. If this really does tank, then you're going to definitely you're going to more than double your money, or more like triple your money. So that's a possibility. The 4 October 18-16 put spread. Another thing is you just sell the straddle and hang out. Remember with AIMT, everybody was bidding to the moon for this stuff and nothing really happened. So you could look at the maybe you sell the 24 call, right? That's $5 out of the money, and you sell some of those 14 puts. Although I never like to sell something for like 20 cents, so I don't really like that. See, the thing is it's such a low price stock that even at this high volatility with a couple days to go, I don't really like this. I don't want to sell a strangle for less than $1, I don't think. So maybe if I were going to do something, I would sell the 15 and a half 24 strangle for $1.10, maybe small. It is kind of a big move for it to just blow. But if this guy with the puts is right, then it's going to blow through this 15 strike, and this is going to end up being a loser. So I don't know if I like any of that. Let's go back to bar chart and see what else we got here. All right, so this is out in March. Someone's buying 2,000 of the 47 puts. That's interesting. It's interesting when they have high volume of like stuff that's like farther out in time. Here's June. Squarespace, June. 90 calls. Bid ask last 19. Looks like they're a buyer of the 90 calls, paying $2.19. Maybe someone thinks that Square is going to go and revitalize again. Now, this Square is not a stock that I really like to trade. It just had this huge run up that really didn't make much sense to me. Kind of similar to like a Carvana. You can see the run up to 83, and then boom, it goes back to reality. If we look at Carvana right now, Carvana, boom, back to reality. Now, but Carvana has had this before, and it's popped right back up again. So who knows? But I think a lot of people in Carvana, it's spent a while up there. A lot of people's like average price they paid for it is higher than this, and that's going to put pressure on this. If it starts to rally, people are going to say, oh, let me just cut my losses on a pop. There's going to be some pressure on this if it rallies again. So Carvana may have seen its high for a little while right now, I would think. Carvana average rating among analysts is a buy. JP Morgan initiates Carvana with a neutral rating, 75 target. All right, so I don't know how we got on Carvana, but let's go back to our list. So we've got, let's see. We've got BMY. No, this is somebody bought 1,000 of these calls. Oh, V-Ray. Somebody bought 20,000 of the 11 calls. Let's look at V-Ray. Now, it's hard to say if this is, let's see, price. Or maybe they sold on a midpoint. Ask bid. It was at the midpoint. So we don't know if this was just somebody overwriting the stock that was shopped. You know, when I say shopped, I mean that they didn't just go out like you and I would into like Thinkorswim and buy 20,000 calls. No, they call around upstairs and say, hey, Smith Barney, hey, Morgan Stanley, I want to buy or sell some calls. Do you have interest? And then Smith Barney might say, yeah, okay, I'll do it. 3,000 of them. And then, am I mentioning firms that no longer exist? Did I say Bear Stearns or something? No. Firms that actually exist, I don't know, Schwab, whatever, they'll shop these orders around, or maybe market maker firms. T3, they shop it around. Do you want to do this trade? And once they've found someone that wants to do the trade, they put the trade up somewhere in between the markets, and they just print it. Nobody even gets access to it. The market makers don't even get access to it. It just prints in the mid-market, and that's it. And they just see the print go up. That's the way more and more stuff happens these days. Oh, CGC, we were just talking about this. Canopy, someone buying 2,000 of the 22 puts. So not expiring this week, but expiring next week. So somebody doesn't like that one. All right, let's go back to highest implied volatility here. Let's check that out for a second. NEO. So NEO is getting close to being delisted here, and it's got some action going on. You know, if you're a $1.57 price stock, then, you know, 400 vol versus 300 vol can be a couple pennies. So I'm just going to completely ignore that because I don't want to trade a stock that's trading $1.50. That's not worth it to me. Tesla, the 50 puts. Once again, a put that's, you know, it's trading 1 cent, and that represents a 200 vol. So this is basically like just when you look at this stuff, you got to kind of look and see what the options prices are and see if this makes sense, because obviously it does make sense mathematically that like 3 cents can be a 200 vol, but is this something that's tradable? No. Overstock.com, we see that we saw that pop up last week also. All right, so there's some stuff to look at. I know you have your own ideas. Thanks for all your comments. I did get a comment from somebody who they were short some in the money calls in UVXY for expiration, and lo and behold, they were assigned on them, of course, because that's what happens when you're short in the money calls. and now they're short 100 shares. I guess it was one call, and now they're short 100 shares of stock. The thing I always tell people is that if you're trading, it depends on which brokerage you're trading. But since UVXY is so hard to borrow, usually what happens is you get bought in on those short shares right away. It doesn't always happen, but it happens a lot that you get bought in, especially if you're with a smaller brokerage house. But we'll have to see if he does get bought in or not on those. VVIX down 475 today. Things are looking brighter for the market, with the Dow up 156 and the SPX up 20. So good day for the market today. Volatility in a little bit. This is one of those days between where short vol people are quietly making money. So we'll quietly make our money and be happy about it. Thanks for watching. We'll see you soon.